Hey, what's going on, everybody, and welcome back. Today's gonna be a little bit different. We're actually gonna talk about some things that people have actually been asking me about quite a bit. I've gotten into investing with cryptos, in the last about year or so, and a lot of people are kind of interested in how we actually get into that. So, kind of run through just a basic synopsis for some of you guys who have never actually invested in anything, and ways to try to maybe get an investment strategy. Now, disclaimer: I'm not a financial advisor. I'm not telling you or encouraging you to do anything with your money. It is your money. You decide what to do. This is just more for somebody who has zero experience with investing pretty much at all, in a way to kind of help reduce the amount of money you may lose. But again, this is your money. I'm not a financial advisor, so take that with a grain of salt. Alright, so the first thing you want to do when you're looking at doing some type of investment, whether it be stocks, crypto, NFTs, anything like that, you want to decide if you're going to do a long game or a short game, right? So really, that just comes down to if you want to put money into it and just let it sit for a long time. And it's going to play, obviously, it's going to be a long game, and short game is going to be if you're probably going to do more like daily trading, right? So you really want to have an idea of what you want to do. If you're either going to put some money into it and hold it for a long time, or if you're going to put money into it and try to ditch it as quickly as possible and make some revenue on that. Again, now when you pick it, you do want to stick to it. All right. The second thing I want to tell you is pick an investment total. So if you want to go in, honestly, if you're new, I would not recommend putting in a crap ton of money. You start with something small, even like $100, maybe a couple $100 if you can afford it, and set that total, right? So know that you have a limit, and you're gonna just experiment with this amount of money, just to kind of get comfortable with how you do this, right? Step number 3, I want you to diversify within this portfolio. Now, again, most investment things will tell you to actually diversify your portfolio, which means don't just get crypto or NFT, like kind of spread your wealth amongst many things. That way it shelters you in case all of the crypto market crashes or goes up or down or fluctuates, which it does quite often. But again, even within just this portfolio of your cryptos, you want to make sure to diversify. So that means you get Bitcoin, Ethereum, kind of mix it among a lot of the top cryptos. Or if you want to get some of the altcoins, you can do that as well. But again, you want to kind of focus on probably some of the major ones, as those are pretty safe and secure bet as far as retaining value. So step number 4 is going to be when you are looking to buy, follow the trends, kind of get an idea of where the markets have gone up and down, and buy the dip. Last thing you want to do is buy it as it's rising, right? So you really want to wait until it dips a good amount, and that's going to be a good buying opportunity. But before you buy it, I would suggest getting a investment strategy, we'll call it, a kind of a way to curb how you buy. So this actually only leads to step number 5, all right? So that investment strategy, my recommendation, again, not a financial advisor, just throwing it out there for you guys, is potentially do a 30-30-30-10 split. So what you can do, right? Say if you have $100, all right, we'll say that as a number. You want to diversify that amongst at least a few different cryptos. So even if you divide it by 2, you put $50 into, say, Bitcoin, 50 into Ethereum. Again, completely up to you. Of that $50, you want to divide that into 4 chunks, right? So you want to do 30% in one investment, 30, 30, 10. That makes sense, right? So what you want to do is you want to buy in the dip. So your first 30%, you're going to buy whatever price point you think is a good price, right? So you put in 30% of whatever that $50 would be. Boom, there you go. You're locked into that spot. Now, if the price actually drops quite a bit, or even just a little bit, and you're like, man, I'm already losing money, what you can do is you can take the second 30%, or if it even goes up, if it goes up, you're already making money at 30%, so you're already ahead of the game. But if it does go down, you can take the other 30%, right, second 30, reinvest it again at a different price point. Now what you're doing is you're moving your dollar cost average down. So if you bought it at $1, right? Don't mind this, just my little cheat sheet. If you bought it at, say, $1, and then you bought it at, like, we'll say 70 cents, okay, well now your average, right, is gonna be right somewhere around that, like, what, 80, 85 cent mark? So that's pretty good, right? So now you moved it, so you're not locked into what you first bought it at for $1. Right, so your dollar cost averaging yourself down. Now again, now you got another 30%. So say if the price drops again, you could take that third set of 30 and buy a third margin. Now again, so you're constantly buying lower and lower, and you're reducing your liability there. Now again, that 30, 30, 30, 10 is giving you an opportunity to buy at 3 different increments of value. So again, if the price drops down, you're kind of shielding yourself from the initial price point. Or if you bought it again at $1, and you bought it again at 70 cents, and you bought it again at, say, 40 cents, well, now your dollar cost averaging yourself down so that you're not subject, to the mercy of whatever the market goes to. Have you bought all of your money in at $1? Now again, the 10% at the end, I kind of keep that as kind of it's kind of open-ended. What you can do is if the price really tanks and you see it as another potential opportunity to buy, you can take the last 10% and put it in, or you can just kind of shield it as a cash holding. The last step I'm going to tell you guys is set your limits and your sell points. So know ahead of time as to, you know, if you like what's a good point for you to sell, right? If you're going to be day trading this or you can do a lot short term, you're going to see probably 3, 4, 5, maybe even up to double-digit gains, swings on every day. I mean, on a normal day, we're probably looking at a couple percentage. Either it goes up, down. So again, it's good buying opportunities or good selling opportunities depending on the day. Now, the more diligent you are and the more you watch this, again, for cryptos, you can buy and sell 24 hours a day, 7 days a week. It does not matter. It's not like the stock market, so you can make money at any hour of the day. So keep that in mind. So again, the more time you put into this, the more money you can make. Again, that's also a disclaimer. You have to know what you're doing and get comfortable doing this, but you can. Anyway, so if you guys follow those 6 steps, again, that's setting your long or short-term investment goals, setting an investment total, diversifying within that portfolio that you guys are going to buy. So say if it's crypto, buying at the dip and try to only buy at the dip. And then again, using an investment strategy, something like a 30, 30, 30, 10, whatever works. There's many other things out there you guys can use. Just a way to kind of have dollar cost average yourself down to a good spot. And then again, setting your sell points and taking those little bits. Again, 3% multiple times is a lot more than just sitting there waiting for 30%. It's much more likely for you guys to get 3% gains than 30% gains. Just keep that in mind as you're trying to make money. And again, I hope best of luck to you guys out there. Hope this video helps a little bit. If you guys want to see more content on this, again, we can do more in the future. Again, I have a pretty significant amount of money invested in cryptos right now, and a lot of it's kind of long-term stuff. Some of that I kind of switched more recently as I've started to make more money. I try to switch it more to short-term stuff. I'm trying to get more into this myself. Again, this is a strategy that's worked for me. I'm not a financial advisor. Again, I have to put the disclaimer as I don't want to be liable for any of your losses. So again, it's just something hopefully helps you guys out. And yeah, good luck, and we'll see you guys the next time.